So based on all the traits that we just talked about for Gen Y, I'm going to tell you some things that I think are going to be going in and things that are going out. So the ins are things to take into consideration as you eventually have to start reaching this group more and more and more. The outs are things that we have to stop doing. Otherwise, it's going to be extremely difficult to connect with this group. In is two-way communication. Out is one-way communication. Gen Y has, as we talked about, they're engulfed in technology. They're used to instant communication, two-way communication. They're the most educated group, and they have known social media, and they have been in that. When you talk to them, they expect to be able to talk back, and they expect to have a conversation with you. They demand a conversation, in fact. So we can't push out information to them the way that we traditionally have pushed out information. I guess some examples of this are being overly promotional, biased, one-way communication, saying this is what's going on with the company. Cold calls. Gen Y will not like cold calls. I guess no one does, but it won't work on them as good. This group is less likely to follow traditional marketing methods. They live in a different world. Those things don't affect them. They can block out advertising. They can block out newsletters, all those things, no problem. This group also will not be following analysts in a traditional sense, which is another kind of one-way push out of information. Same with email blasts will be less effective. Remember, Gen Y has access to unprecedented amounts of information and education. And since and part of that as well is they're going to be looking for independent information. They're not going to expect you to be pushing it out to them. And if you are, then they're going to want a conversation with you. One thing that's with regards to this I wouldn't mind mentioning, and I hope that other people have been reinforcing it throughout the conference as well, is that generally in IR when we do social media, okay, yeah, it's called social media, but we're not actually social on it. Gen Y is going to be demanding this. You're going to have to be able to have conversations with people. You're going to have to respond to people's comments. You're going to have to say, hey, how are you doing today? Well, not necessarily like that, but you have to be able to have a bit of, I don't want to say small talk, but you have to have some sort of a connection with them. Gen Y prefers time and really engaging great experiences over money. Part of living in the world that they do, they really like to travel, to become cultured, to get out there, to experience life, to skydive, to do all those crazy things. And to them, those experiences with their friends, social experiences, are more important than money, for now, the time being anyways. Keep in mind that we've been talking about having sort of sketchy markets for the last 10 years. Maybe that will right the ship a little bit once things get better in that sense. And as we talked about as well, Gen Y also is, their saving rate is the lowest out of any generation at that stage in their life, which is very interesting. And their trust in financial markets is, as we mentioned, very low. In fact, 30% of Gen Y surveyed said that they would never, ever invest in the stock market. But that said, I want to have that sort of point as well that if we had a bit more of a bull market, I'm sure that would change as well because people would get in it, right? I think that this next slide is probably the most important slide. In is context, transparency, and corporate trust. Out is perceived closed-mindedness. Now, this is a very broad concept, but I'm going to put it into some context of what we need to do this. Gen Y is liberal, diverse, extremely well-educated, and right now they trust corporations less than ever. This added dimension, as well as a generation gap. Gen Y, they grew up during the 80s and 90s, which are a time when metal markets and resource markets were a little bit depressed in terms of the prices, and no one was really getting them into the industry. No one was really telling them what was going on from an investment point of view. So this is a challenge, especially for people involved in resources. Gen Y doesn't know about this stuff. Meanwhile, a lot of people in the past have concentrated on it, and they do know it. So part of this is, in terms of the context, is we have to be able to educate people, and we have to put things into perspective for them. So if we're talking about, if you're a graphite company, what does graphite mean? No one knows. You have to be able to put it into context. Even things that are more obvious to me and you, a lot of this group is going to be dealing with it for the very first time, and we'll have to convince them to be resource investors. In terms of transparency, this is another huge one. Gen Y already it has this automatic distrust of all things corporate. So we have to prove to them that, that we have to have a professional kind of attitude towards things. We have to engage them in ways that are going to work for them, and that's going to be key in terms of looking transparent. Again, with the information flow that we talked about, it has to be a two-way communication, not a one-way communication. There's also elements here of corporate social responsibility. I know that most investors would say, oh, this company is trying to be green, like that doesn't affect my money at all. But for Gen Y, it is going to have an impact, because there are going to be some people that, because they're so community-minded, because they want to be doing good for everyone at once, as well as themselves, they're going to want to be supporting things, companies in the industry that have some aspect of responsibility to what they're doing. I mean, let's talk about ways that we can actually reach Gen Y. I think a big one, as I'm sure everyone has gathered, is going to be through social media. But there's going to be some other ways that I'm going to go into as well that I think are really important. So let's go with social media first, because that's the obvious one that everyone's talking about, right? So I think that things like stock twits are going to be bigger and bigger and bigger as Gen Y keeps getting into the mix, because they're going to want to be participating in that conversation. Not only that, but Gen Y is extremely group-minded, extremely team-oriented. They're going to want to be following other people's ideas and contributing their thoughts to it, and in some sort of an ongoing dialogue with other investors. So this is going to be something that's going to be a little bit different from what we've seen in the past. And obviously Facebook and Twitter and all those other social networks are going to be really important as well. The kind of less obvious aspect of this is I think that things like financial aggregate blogs like seekingalpha.com or things that are just blogs, things like these are going to be really important, because Gen Y seeks out information in that way. They don't want to be pushed information from us. They want to be seeking out information. So because of this kind of attitude towards things, we're going to have to make sure that information is out in those spots and is independent as possible. If we try and sell them on something, they're going to immediately distrust that fact. So we have to keep it transparent. We have to put it out there in that sense as well. Analysts is a good example. Gen Y, as the most educated generation, they're going to realize that these people are paid in certain senses, and there's going to be an automatic distrust with that group. So again, it has to be independently focused. It has to look like the information is coming from a non-biased source. Gen Y is going to be looking up this stuff. They're extremely resourceful. So that said, let's look at the size of Gen Y coming into the picture here. This is in the United States, and Canada is like this as well. This is an age population pyramid. As you can see, the group 45 to 55 to 65, that's kind of all the boomers right now. And then you see the next big group kind of down below there coming into the force. So there's going to be about 80 million Gen Y. Well, there is 80 million Gen Y. And so that's worth noting. But even more worth noting, and this is kind of my little ace in the hole that I thought I'd throw into the end of the conversation. What about these guys? In emerging markets like China and India, how big is that group? Because I think it's going to blow your mind when you see the numbers. Gen Y in China is 250 million people. That's 3-4 times the size of the group in North America. And then even crazier, in India, 426 million. And if you look at their population chart, you can see that right at the bottom is where all of the people are right now, and not at the top. And these markets are growing at a rate of 8 or 9% per year in terms of the GDP per capita and GDP. And these 426 million people, this is going to be a significant amount, something that we really have to deal with in a globalized world as IR people in the next few years here. We're going to have to start tapping into these space. We want to start getting into these markets before everyone else is. I think this is going to be eventually really important. I mean, the whole world is going to be like this. And there's going to be a lot of rich places outside of Canada, the US, and Europe. We're going to have to be seeking investors in a lot of different places. So that's kind of the whole sum of the presentation. We have to keep an open mind when we're communicating with Gen Y. We have to have a two-way talk with them. Some of that will be through social media, but even if you're talking to them on the phone, you have to develop a relationship in that sense, and you have to get their feedback from them, and you have to get their opinion on things. The key is just not to push out information without regard for what they're thinking, what they're saying. They will feel disrespected by that, and that's kind of the old way of doing things. Beyond that, Gen Y is more educated and liberal than any other group. We have to keep that in consideration. They're going to be seeking out independent information. They're going to be analysts and things like that are going to work differently for them. Their analysts that they follow will be probably a group of people on a financial blog or something like that, not necessarily a traditional analyst that sends out a newsletter or something like that. And they'll want analysts that seem independent and completely non-biased, that they know they're not getting anything on the side. Above that, we have to keep in mind that because they're the most liberal group, we have to approach them in a way that we're respecting of that. They're gonna want corporate social responsibility. They're gonna expect it from us. We have to show them that we're at least trying our best in that sense to push things like a green agenda or at least sustainability. They're going to want to see that from companies in the resource space.